Hey folks, it's Rod with Pow Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Also home to the best MJ community. Today is Tuesday. It's June 18th. Hope you're doing well. And in this video, we're going to bring up the SNDL chart. We'll do some technical analysis. I'll give my thoughts and opinions on the technicals and the price action leading up to today and in the days, weeks, months ahead. As always, this is not financial advice, though. I am not a financial advisor. This is for entertainment purposes only, and you should never, ever buy or sell anything based on anything that I say or write. But spoiler alert, it looks like we could see another leg down, so we're going to be looking at 175 USD as the next critical level of support. And there was a bearish continuation pattern and bear flag, which has been reached, but there's still tons of bear flags across the sector, and the stock isn't set up that well if the S&P 500 were to reverse. We had two of the highest daily candle closes ever in a row on the S&P 500 this week, and then last week we had the highest weekly candle close as well. So that was the highest record weekly candle close last week, and I mentioned that in the Pow Group the biweekly newsletter. But we need to be ready for a massive correction, and it'll just be healthy, right? We could easily see a 5% pullback on the S&P 500, which would likely equate to a 10 to 20% pullback on individual stocks, especially in MJ. It can be even more volatile, right? Because it's one of the most volatile sectors on the planet next to crypto. So we have to be prepared for that. Before we get to it, though, make sure to smash like. It helps support me in the channel. And if you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or when I go live. Full disclosure, I do own SNDL in my portfolio. And you can follow us over on X, formerly Twitter. The handle for that is @GroupPow. Going to be using that as my platform of choice going forward. We also have earnings coming up. Looks like mid-August. We'll want to see official confirmation from SNDL with the earnings date, as always. But they are estimating here on TradingView 176.285 million USD and forecasting flat for EPS. If we take a look at Moomoo, they're saying, based on one analyst, in terms of Canadian dollars, 240.4 million. So they're very optimistic in terms of revenue here, which it came in last quarter at 197.75 million. So that is a massive jump up, and they said last quarter that it was due to a seasonality type of effect. And they also mentioned that they were dropping some products and things like that that just weren't driving profit margins. So getting rid of some of those SKUs that just weren't generating profit. So that was a big reason, and we should start to see that rebound. It'll definitely be higher than what it was last quarter, I would think, or else I'd be a little bit worried. But like I said, analysts are quite optimistic leading into quarter two here. And if we take a look at the EPS, earnings per share, again, forecasting 0, so flat for the quarter. Taking a look at the technicals here. So we did have a daily bear flag. We had our high, low, lower high, weak bounce. We didn't even get above the 0.236 fib there, let alone the 0.32 fib to negate it. So anything under 237 there was a potential bear flag. And then once we lost the low there at 214, that confirmed it with a break of support. That gave us our lower high and lower low. We also had a daily downtrend that confirmed back on May 20th. So a bearish continuation pattern is even more probable to play out when you're already in a downtrend, because it's a downtrend continuation pattern, right? And then we also had an EMA 12 and 26 bear cross. So all the signs were pointing to more downside. And then once we lost 214, that was the signal that it confirmed the bear flag. And then from there, we dropped another 14%. So that was, if you're somebody who likes to go short, that was a decent short opportunity. If you're somebody who's looking to go long, well, at this point, we've already hit our target. So if you go from the high to the low, move it out to your 0.32 fib. I've been saying for a while now that we're targeting about 185, 186, and we hit 185. Right on the money. So those who say that technical analysis doesn't work, you just don't know how to use it, right? It's not the tradesman or the tradesperson. You blame the tools. It's usually the person using the tools that don't know how to use them properly. And just because it says something doesn't mean it's a guarantee, right? It's probabilities. And again, all the sector, MSOS had a daily bear flag as well, targeting 686. So if you're only looking at SNDL, let's say you only own SNDL in your portfolio, well, it's irrelevant. Like if you're not looking at the other leaders in the space, specifically MSOS, because of the strength in the US MJ sector comparatively, you need to be, right? Because there was a daily bear flag on MSOS as well, which has been reached. And now we're looking at a potential IHS inverse head and shoulders. But with that being said, that added to the bearish momentum and probability that we were going to see more downside from here. And like I said, we've already hit that 185 target. Now it's 175. So, and we still have yet to hit daily oversold, which tells me that we could potentially be heading down to 175 support. 175 is going to be crucial though, because that is weekly support at 175. And right now, it's a weekly uptrend that remains intact as long as 175 holds. We could potentially see a head and shoulders form though on the weekly time frame, but not expecting that to be the most likely scenario, and it would look a little something like this. But again, not expecting that to be the most likely scenario. And if we take a look at the weekly time frame in depth here, we could see an EMA 12 and 26 bear cross as well, but it's quite a ways away before we see that. So maybe we start to bounce soon and then form a right shoulder. That's possible as well. But I wouldn't want to see us lose that 175. That'd be a little concerning. Maybe if you dip to like 168, 170, maybe go stop loss hunting and freak some people out before a big move. But monthly consolidation underway. We have no monthly support all the way down to about 130. Yeah, 130 there, and then 125. But we are in a monthly uptrend with higher lows and higher highs as well, which was the first time in history, and we're gearing up for the first ever monthly EMA 12 and 26 bull cross, but you can see how far away those exponential moving averages are. So it's likely going to be a couple of months at least before we see those cross bullish. I would be more inclined to think, 3 to 6 months before we see those cross bullish. But like I said, weekly support coming into play there at 175. We've already hit our bear flag target of 185. And like I said, from current levels to where we are here at this local bottom, to where we could potentially be heading on weekly support, that's only about 6% away. So I'm definitely thinking that it's possible. I wouldn't be surprised. I'm not going to be surprised if we do drop to 170. And we also have a lot of support there as well. Again, there's still tons of names in the MJ space with daily bear flags and yet to hit daily oversold. And I mentioned after this big move here that daily oversold would be a decent area to target. And we're sitting at 33.82 on the RSI. Anything 30 and below is considered oversold. So we're getting very close to that target here now. And I do want to show you a lot of support. Right now we have rock solid support around that 170 area. We did have a bit of a heads up though. We had a close below the 10-week moving average, the stochastic cross bearish. So that was three weeks ago. Yeah, so we had a stochastic bear cross 3 weeks ago, which was our initial clue that we could see some downside from here. Then, like I said, we had bear flags, daily downtrends. We lost the 10-week moving average. There was tons of bear flags across the sector. And then we had the MACD. Usually you see a stochastic, then the price, then the MACD, and that's exactly, not every time, but I would say 80-90% of the time, that's the chain of events where you see the weekly stochastic bear cross, then you see the price close below the 10-week moving average, then you see the follow through on the MACD bear cross. The good thing about this is we already had all of those crosses happen and loss of the 10-week moving average. Therefore, downside could be limited. And like I said, I think that 160 to 170 area is going to be a very strong area of support, rock solid in my opinion. You can see here we also have the 50 weekly there at 170 and the 200-day moving average at 173. And typically when you see these pullbacks and after a big bull move and a long drawn-out bear market, you usually see a pretty hefty pullback and one final shakeout before the massive breakout, right? It's kind of that wake-off type of accumulation pattern in spring. So I do think that we could drop, like I said, around 170. There's a chance that they go stop loss hunting, maybe drop it to 160, and then everybody starts to panic, right? And then that's generally where we start to reverse. So I wouldn't be surprised in the least if we did test 170, 160 here before we see another move up. And then, like I said, leading into July 22nd, the end of the comment period for rescheduling, there was some more FUD out today about that. But at the end of the day, I believe it's going to happen. I believe Florida's going to pass adult use as well. We've got Pennsylvania, Ohio coming online. We've got other states, Germany looking to fast track Pillar 2. So there's lots to be bullish on. Potential for banking after rescheduling as well, and then uplisting to the NASDAQ is the most likely scenario in my opinion. So like I said, a lot to be bullish on. Unfortunately, short to medium term here, it's not looking too hot. But if you're expanding your time horizon, it's looking very, very good into the end of the year and then into 2025. If the stock market were to see a pretty big pullback and healthy correction of 5-10% on the S&P 500, we would not be set up well. And then, you have to wonder, when is the S&P 500 going to top out? Probably within the next 3 to 6 months. I'm watching for interest rate cuts. The first interest rate cut, we know Bank of Canada, ECB already did it, first time in over 4 years. The U.S. is never first, but never last. I think they'll more than likely do it. There's a slight chance they could do it in the July FOMC meeting, but I think it's more than likely going to be in September. And they already said only one rate cut this year. So I'm thinking that it could happen into the end of the year and, in September. And then markets will be bullish for another few months after the election potentially. And then I think, end of 2024, beginning of 2025 early is where we're going to top out on the broader market. And MJ, if the S&P 500, you have to think, like if the S&P 500 sees a 20-30+% correction, which it very well could, right? We're at new all-time highs and blue sky breakouts. We're very overbought. And some of these valuations just, aren't really that logical at the moment, right? If you take a look at some of these companies, these the Magnificent Seven, right? That comes to mind. It's accounting for like 30% of the whole S&P 500 and almost $4 trillion in market cap. So you have to wonder, if the S&P 500 goes into a bear market, it's going to hurt MJ temporarily, and MJ could easily drop. But, hopefully into the end of the year here, we can get enough catalyst where we create enough room and momentum to the upside and a decent move to the upside on MJ that it cushions that blow whenever the top of the broader market is in, right? And then we start to go the other way and see downtrends on the monthly time frame on the S&P 500 and most of our big tech, AI, crypto, etc. And then what I think would happen is MJ would dip heavily, obviously, with the broader market. Whenever the broader market goes down, all sectors are going down, everything goes down, right? So it doesn't matter if it's MJ, unless there's some kind of crazy news catalyst that boosts the whole sector, right? If they decide to skip rescheduling and deschedule it and then effectively legalize it, that's one thing, but I can't see that happening right now. Ultimately, that's where we're going. But my point is, we're probably going to dip, but then I think MJ will recover fast, V-shaped recovery, hard and fast, and I think it will be substantial. And I do think that MJ could be the best performing sector over the next couple of years. But let me know your thoughts and opinion, if you agree with me, disagree with me in the conversation, in the comments rather, and we'll continue that conversation in that comment section. But hope you have a fantastic evening. Going to be going to the pub here with some friends to check out the Oilers game. So go Oilers, go. Let's see if we can pull off another win here and go up, 2 in a row, and then be up to 3-2 in the series. We know we not looking good, and I think it's like 3% or like 5% of teams have ever come back from a 3-0 deficit. But there was an interesting stat. The Edmonton Oilers, the last 3 times they lost 3 games in a row, they went on to win like 8 games in a row, 10 games in a row, and then 5 games in a row. So this time we lost 3 games in a row. We just need to win 4. So we'll see. If anybody can do it, it's the Oilers. All right. Have a great night. Go Oilers, go. It's Rod with Power Group. Thanks again for joining us in the pursuit of wealth, and we'll see you again in the next video.